You're watching All About Money on HKIBC. I'm Isabel Wong. Well, Hong Kong Chief Executive Carrie Lam announced that the extradition bill that sparked months of protests in the city will be officially withdrawn. The announcement gave the local benchmark Hang Seng Index its biggest gain in 10 months, despite the decision was met with skepticism. As the unrest is nowhere near completely resolved, how is the city's economy going to be affected in the near term? And is Hong Kong no longer important to China financially, just like some commentators have previously claimed? Let's bring in Gary, Natixis Economist for Asia Pacific. Gary, welcome back. Lots of questions on Hong Kong in this block because obviously one of the most talked about impact and risks in the financial sector locally would be capital outflow from Hong Kong. So in your view, like in your analysis, have you seen any signs of such capital outflow activity out of Hong Kong recently?
I think if we need to look at the broad capital flow condition in Hong Kong, obviously it's a very fast-moving financial center, right? So it's hard to actually see the complete picture. But however, we can look at different signs to see whether this is happening. So I think, and also if we are talking about capital flows, we cannot ignore the currency as well. So I think part of the reason that we think that from the official data that we do not actually see very large scale of capital flows yet. But however, if we look at some early indicators that we try to compile together in the market, we actually see sign of stress. So if we let's say look at the currency, the HKD. So previously that HKD has undergone, let's say, no matter whether it's the weaker band or stronger band, has been kept in a very, I would say, a short band that compared to other currency. So in the past, a lot of this depreciation pressure is actually driven by the fact that carry trade activities is actually quite a safe bet for investors, that you can actually borrow in the HKD and then actually invest in the USD so that you can actually earn the interest rate spread. But however, the sign that we are seeing, which actually worry us a little bit, is that we're actually seeing a scenario that LIBOR is coming down and HIBOR is going up, which actually yield reverse yield differential. But in this scenario, we continue to see that the HKD continue to depreciate towards its weaker end. So what does this tell us? It tells us that there's something more than a carry trade, which could be the risk premium that investors are currently pricing in. So after we talk about the currency, we can now look at capital flows. So as we said, the data is not really complete, but however, if we let's say look at the stock market, we continue to see that yes, there is actually outflow, but the scale remain quite, I would say, not under control, but quite mild. But of course, compared to the past crisis as well. So we do not think that right now we are seeing that there's massive capital outflows flowing out of Hong Kong because there's a crisis in this city. So we're not there yet. So, but however, if we look in the more medium term, right, I think the current situation means that even though there is no capital outflow in the short run, it means that in the medium term, there will be fundamental impact for Hong Kong in its role on whether, let's say, foreign firms continue to treat Hong Kong as a regional headquarters or even for China's or international financial center purpose.
Yeah, so this recent announcement coming from the chief executive that she is finally officially withdrawing the bill. So obviously she said that it's her own decision, not Beijing's decision. So how much do you think, in your view, like the financial industry in Hong Kong has played a part in this decision?
I think it's hard to say or look into how she made the decision because I'm not really, part of her team also. But however, I think the financial industry indeed is very important in Hong Kong, probably more than a lot of other industries. Of course, we can say that retail sales, tourism are important, logistics are important. But however, the key comparative advantage of Hong Kong is really that it is China's preferred offshore center. At the same time, it's an international financial center. So I think if the current social unrest continue to undermine the credibility or the confidence on investor about on this aspect, I'm sure that it may not be a good thing for the financial sector in Hong Kong.
Yeah, I would like to get some perspectives on the city's economic performance as well, because obviously Hong Kong's July retail sales, it sank by the most since February 2016. And then, in your analysis, have you seen any early indicators that say the political unrest in the city is really taking a toll on the city's economy?
I think some of the problems or the triple whammy that Hong Kong is facing right now is really the slower Chinese and global economy. Of course, the US-China trade war as well, and lastly, the prolonged, I would say, about the social unrest. So I think it's if we really need to drag some of the factors out and decide which one play a larger part is difficult. But however, in some of the more, I would say, the tourism or retail-related sector, we can already see that there is a fall in tourist arrival, and then the retail sales has been performing quite bad. I think if you really walk in the street in Hong Kong, let's say on Sunday night, you actually see that, oh yeah, actually there's a lot fewer people out there.
This is true.
So basically, I think that no matter there is the external demand could be weaker given what is happening right here, but even for domestic consumer, it's hard for them to actually consume more based on the current scenario. So I think it's a combined effect of the weaker consumer confidence, no matter whether it's domestic or external.
Yeah, and so you obviously just pointed out that one of some of the hardest hit sectors at the moment would be retail and tourism. But then, are there any other sectors that could be next?
I think if we look at the most immediate impact, of course, because of our people movement, it could be, of course, it's retail sales and also tourism. I think for some of the other sector in, let's say, a medium term that could be hit is really a question on whether the investors still have confidence in Hong Kong. For example, if we look at real estate, if we look at financial sector, these sectors are all built around the fact that people want to put the assets in this city. So I think in the medium term, if the issue remained, I would say, unsolved, these two sectors are likely to take burnt in the future, but however, we haven't seen a really big impact right now.
Yeah, another one of the most discussed questions, or in your view, many people would probably have neglected this topic, would be that some are arguing that China does not really need Hong Kong to grow its economy, but especially during a time when Beijing is really ramping up effort in terms of opening up its financial sector, as well as boosting its domestic economy. But these arguments, do you think it's justified that they say Beijing doesn't really need Hong Kong?
I think for that, a lot of analysts actually mentioned that if you only look at the GDP, yes, the share of Hong Kong to the rest of China has dropped from 16% in 1997 to right now merely 3%. But however, I think it's more, rather than saying that Hong Kong is not important to the rest of China, I would rather say that the area has changed. For example, it's very easy for anywhere in China to actually build another port. But there's something that is very hard to replace, which is the financial role of Hong Kong right now. So on the funding side, if we actually look at the Chinese corporate funding in Hong Kong, we actually see that in terms of overseas IPO, 73% took place in Hong Kong. And then if we look at bonds, 60%, syndicated loans a bit less, 26%, but all of this are USD liquidity. And if we look at investment, it's also more than 50%. So I think putting all of this together, it means that on the funding and investment side, it's really about Hong Kong's role in helping China to actually get the global capital while remaining a closed capital account, which is really the key for Hong Kong, in terms of the financial sector. And of course, if we look a bit further as well, Hong Kong has also been, I would say, a pilot a city to actually implement a lot of Chinese government initiative. Let's say we have the Stock and Bond Connect, and also it's actually 50% of the RMB settlement actually took place in Hong Kong, which has an impact in the RMB internationalization. Of course, there's still a long way to go, but Hong Kong plays a very vital role in actually a lot of this government different policies. So I think to that end, actually it's quite important for Hong Kong to maintain this role, no matter it's for itself and also for mainland China as well. But of course, beyond that, we also see that there's more Chinese banks actually setting up their business in Hong Kong, of which we actually see that from 2000 actually 2010 that the market share is around 22%, but right now it has actually surged to 37%. So the other important stakeholders compared to the past is that Chinese banks are actually using Hong Kong to gain liquidity as well. So I think putting these two together, Hong Kong is important for mainland China in terms of getting capital and also promoting the, I would say, the investment or national brand. On the other hand, it's also because that Chinese banks are increasingly involved in Hong Kong.
Yeah, another role that Hong Kong plays for mainland Chinese investors would be like converting their cash into US dollar as well. So very quickly, obviously there would be some downward pressure in the Greater Bay Area project as well. So how's the outlook looking like at the moment?
I think in terms of the Greater Bay project, we actually did quite a detailed big data analysis in terms of the sentiment on what people think about it. So actually an interesting finding is that I think after so many years, right, Hong Kong has always have different momentums, let's say no matter from the global environment or the China's opening or different aspects. So I think the market actually really anticipate this as a major boost to the Hong Kong's growth, especially if you look at a lot of negative news right now. But also sadly speaking, because I think after the major outline development plan, which is announced in February 2019, we do not see any, I would say, major steps that the government wants to enhance this further, especially from the Hong Kong side. So this also boils down to the fact that we actually see that a lot of investors think that yes, it's a very good plan, but however, there's not really much exact detail on how the government is going to support it or what kind of funding will be channeled into. So I think at this stage it's still a very broad concept of integration. Of course, in the future, we still have to continue to see what this plan will bring to Hong Kong.
Gary Ho, that thought will be coming back in a minute. Well, Gary will be staying with us, but still to come on the program. Fresh US tariffs have come into effect while China has retaliated with its own levies. How will the trade spat between the world's two largest economies play out? Stay with us. Welcome back to All About Money. Well, fresh US tariffs on more than 110 billion US dollars of Chinese imports have come into effect, marking the latest escalation in the trade spat between the world's two largest economies. China, meanwhile, has retaliated with tariffs of its own on US imports, while a new round of face-to-face trade talks in Washington scheduled for this month is now postponed to early next month. What can we expect in the coming weeks? Still with us is Gary Ng, Natixis Economist for Asia Pacific. Gary, well, now we shift our discussion into US-China trade war because obviously a lot has happened, and even the fresh rounds of tariffs and retaliatory tariffs kicked in. So with new tariffs coming in, like how do you view the latest exchange and events that were unfolded in the past weeks?
I think if we even look from a broader scale, that we think is kind of tango dance between the US and China that really it brings us back to the original point every time without really much progress. So I think what has happened so far in the past few weeks is really another, well, you can see the escalation again. On the other hand, the two leaders or the team of the two leaders are going to meet in October as well. So I don't think I think it's still at the stage of negotiation. As mentioned before, that probably 90% of the deal is done, but however, it's always the last 10% which is the most difficult. So I think put it in a general point of view that this trade war or negotiation is going to last, and is going to last probably longer than a lot of people expected.
Yeah, so while, say, a trade deal, you just said 90% of the details might have been done, it's only that 10% that is not going through. So while having a US-China trade deal is not really an option at the moment, like, do you think investors have been, say, overly optimistic about the prospect of a trade deal, and does it really matter to the global market anymore if the two sides are not talking?
I think it still matters in terms of volatility, but I think a lot of, broadly from the investor universe is that people do not expect probably a a full-fledged deal in the very short run. But I think in terms of the negotiation, it still continue to impact the market because we can see that stock market move and then also the different currency as well. Not to mention whether a depreciation of the currency could offset part of the tariff. So I think the direct impact is that this kind of news are still going to move the market. However, the indirect impact is also that whether the retaliation of both sides will have a more longer term spillover effect in terms of different asset classes.
Yeah, in terms of products that are, say, on the latest list of products that are tariffed at the moment, like China has made an announcement on like 5% of the tariff on US crude oil. So this is kind of raising a concern in terms of like a potential drag on the global oil demand because obviously China is the 9th top US crude oil consumer while, say, only about 1% of crude oil imports in China from the US at the moment. So like, would you say China at the moment has the upper hand since crude oil is such a strategic product there?
I think in terms of crude oil, of course, China is one of the biggest consumer, and of course the US as well. But I think in terms of if we only look at this issue, it's hard to say really that China directly has an upper hand throughout that. I think this is part of the progress of the decoupling, which is actually between US and China, driven by the Trump's administration. So I can see in the future that maybe the high import of the crude oil could be part of the trade deal. But however, I do not think that this is a key component of determining whether this deal will take place or whether it will be a very important element in terms of the, I would say, the overall trade deal.
Yeah, what about the export side for China? Like, does China have any, say, immediate substitution if they're not selling to the US in the near term?
I think it depends on what kind of product it is, because I think I really like your question before, because you actually look at products and a lot of people actually only look at the value. But for me, I think it's about the type of products that are the most important. So I think throughout the last year, we already see that there is a higher share or higher amount of exports from China to, let's say, ASEAN or different markets. So I think from that we can tell that yes, China is trying to export some of the other products towards the other countries. But on the other hand, it also could be because that some of the Chinese companies may also be forced to reallocate some of the factory towards like lower cost bases, basically, to avoid the tariff or for different reasons. So I think that from this perspective, this is already happening. But the more interesting angle is that how will this affect the Chinese economy? I think for now it is still minimal. Because if we look at employment, it seems that it's not doing really well from the PMI data, but it's not collapsing at least. So I think in the short run, China still have many methods to actually try to boost up the domestic demand to countereffect some of the external pressure. However, if we look in the longer term, this will be an important issue that whether the two powers can actually solve the issue and how would this decoupling actually impact no matter whether it's the US or in China.
Yeah, after the trade side, obviously there's the currency side as well, because early August, yuan has finally broken 7, and then the US named China as one of the currency manipulators. So how do you view this kind of event, and what does it mean to the outlook of the Chinese currency? Because recently there are some banks that they are also adjusting their forecast in terms of the yuan. They're saying that it could hit 7.2 or even 7.5. Like, is 7.5 possible?
I think it depends on the time frame. Obviously, from a currency perspective, right? If you have a weaker currency, of course, it can help part of the export. But I think nowadays in the world, that currency or this kind of price is not the only factor, because if we look at competitiveness, there are also other factors beyond that. So, but I think China is going to allow a bigger movement in the yuan, which is the fact that we know. So I think at the end of 2019, we expect the yuan to depreciate to 7.25, which is, it's not a really big scale compared to other currency, but it seems to be quite a big move in terms of the RMB itself. So I think going forward, there will be a higher volatility. I wouldn't say that China has weaponized the yuan, as many analysts say, but it is part of the, I would say, the global trend that if we look at a lot of emerging Asia currencies is also depreciating, probably except a few, which is the Thai baht. But under this global environment, it's hard for yuan not to follow the trend.
Yeah, so would you say the Trump administration's move to label China as a currency manipulator a smart move, since the currency movement that we saw was less than 10%?
I think for that, I think it's more a political or bargaining chip issue rather than whether it's economical or whether China has manipulated the currency. Because first, that it's hard to define what is manipulating a currency. Of course, the U.S. has its own definition. However, I think going forward, we may also see the definition being changed, right? Because of different, I would say, the rationale in terms of the negotiation or the trade talks. So it's hard to say whether it's smart or not. But however, the direct effect is really that maybe Trump has another bargaining chip on this issue.